When you see the Shanghai Metals Exchange consistently pricing silver above Western spot and futures, it's basically the market screaming that the metal is worth a whole hell of a lot more, not only where it's needed, but from where it is being financially priced. And it's the market's way of saying you're full of crap, COMEX and LBMA. And East is doing price discovery in the physical. And the West is still doing price discovery in the paper. And the spread is what happens when those two worlds stop agreeing. And if this continues, especially if it widens, and the early stage evidence is that it is widening, the physical market is starting to overrule or override the paper market, period. And when that dam breaks, the move often, I would think, isn't polite. It'll be chaotic and maybe even disorderly.
Silver has just printed an all-time high of $105 in the Shanghai futures market, a historic development that strongly suggests the global silver market is no longer behaving the way it has for decades. This is not a marginal move, and it is not speculative noise. It is evidence that physical silver is being repriced where it is actually needed, while the West continues to anchor prices to leveraged paper instruments. But that headline price is only the smoke. The fire is what is happening inside Western vaults right now, and it is unfolding faster than most market participants anticipated. Physical silver is steadily draining out of the COMEX and the LBMA as the arbitrage gap between East and West continues to widen. The price difference has reached nearly $14 per ounce, which is no longer a spread, it is a structural fracture. That divergence signals a market that has lost internal coherence, where physical demand is overwhelming paper price discovery. This is not a typical bull market driven by momentum or chart patterns. A physical arbitrage loop has formed, forcing metal out of Western exchanges at a pace the paper market cannot arrest. Contracts can be created indefinitely. Physical bars cannot. Before we go further, I want to hear from you. What do you think is really driving this silver run? Is it industrial demand, sovereign stockpiling, financial instability, or something deeper that still isn't being openly discussed? And why do you think the mainstream media remains largely silent as these unprecedented moves unfold? If this analysis resonates with you, please support the channel by liking the video, subscribing, and sharing it with someone who follows precious metals closely. This community exists because of serious, long-term thinkers, and your engagement helps keep this conversation going. We appreciate the support and hope you enjoy the video.
I don't have a crystal ball. When I said buckle up in November, it wasn't because of a chart pattern. It was because you could see, if you look closely, if you open your mind to looking and seeing outside the box, right? Which is something I've always really found easy, to look outside the box. And, growing up in high school and college, it maybe didn't always serve me so well, but in the big picture, I think it does. And I think you have to look outside the box. Conventional wisdom in unconventional times serves you wrong, in my opinion. Anyways, you could see that the paper price and the physical reality were on a collision course. I mean, look, let's just first zoom out for a minute, okay? So silver didn't just drift higher. In my mind, it's repriced. It went from the 20s and 30s early in the year to, now into the 70s and now into the 80s. That's really not normal for a market that is this critical. But what I would argue, Jesse, is that price suppression always ends badly, period. You can only manipulate a market or push it in the direct, over a long period of time, push it in the direction that it is going. And you have some very strong forces pushing against the price suppression. Let's talk about policy shift for one moment. You now have the U.S. moving silver into the critical mineral category. This frames silver for national security, not just as a collectible metal or a monetary metal. Response to that, the massive choke point. China tightens the gate on refined exports. And this matters because they are responsible for 70% by most sources of refining the doré bars that come into the market, come into the West. In my mind, this is about ownership more than anything else. It's about physical ownership. Now, when I look back, I would have said that the central bank's buying and the fact that there's no counterparty risk, all of this stuff was big, right? But COMEX is telling you the truth right now. And if you want the real story of what's going on, and it's very easy to see this, is in fact, it's really the only thing that I focused on, truthfully. A standard COMEX contract is 5,000 ounces silver. Gold is 100 ounces. But when you see sustained, now this is going on 15 months now, 16 months, outsized delivery demand on COMEX, what you're really watching is a fight over the real inventory, not just speculative paper positioning. And let me just try and explain what I mean. In December, there was 3,706,000 ounces of gold delivered. I mean, as big as it gets, but 64,730,000 troy ounces of silver issued and stopped. Issued and stopped is a fancy word of saying delivered. Now, not all of it leaves COMEX, but a lot does. So let me ask you a question. Who the hell's got, and that's an all-time record for the month of December, who's got money to buy 65 million ounces of silver? Let's let that sink in for a second. But this is every single damn month since November. And what really pisses me off about all of this is there is no mainstream acknowledgement of any of this. Go turn on the news tonight, watch silver ripping to all-time highs, and you won't see a word about it. And where is the journalistic integrity in the idiot Jim Cramers of the world who would say, you know, who's buying 65 million ounces of silver in the month of December? And I'm sure he didn't talk to us about the critical mineral designation or the fact that China, the massive refiner, said we're going to limit exports. But if a mint box of Silver Eagles, which is 500 ounces, weighs 42 pounds, who just took possession of 65 million ounces? Let that sink in for a minute. Now, January, Jesse, is not a scheduled delivery month, but you can still take delivery. But here's where it gets crazy again. Supporting the only thing that matters, right? The most well-funded, well-informed traders, the most well-informed traders in the world are doing this, right? They don't do this, pardon my French, for shits and giggles. I don't mean to be profane, but I want to be profane so that it sinks in. This is all you need to see, right? Forget about the noise. Forget about the rhetoric. Forget about anything. When the most well-informed traders on the planet, now I've been talking about the central banks forever, but who's doing it here on COMEX? Stand for delivery every single month since he was elected last November. This is 4 feet of snow in Death Valley in July, how unusual it is. So, at this level, Jesse, delivery is the only message. And so for 2026, I expect higher volatility. I expect oh, by the way, did I mention? Yes, I did. I did mention how much that was. Maybe I didn't. So for January, for the first 3 days, we've seen already, just in the first few days of the January delivery, 6 days, 7 days. Last I looked, last week, Friday, we saw 33.45 million ounces of silver delivered just in the first few days of January. So that's almost 7,000 contracts delivered just in the first few days of a non-scheduled delivery month. Who's doing this? That's all that matters. So yeah, I do expect higher volatility. I think a market that increasingly trades on availability, not just price. We've seen a backwardation, constant backwardation, which means that there's more demand for it right now than I'm not going to trust you into the future, which is supposed to be the opposite. You're supposed to see a higher price into the future because it takes into account interest, cost of money, storage, all that stuff. No, I want it right now and I'll pay you more for it because I don't trust you that I'm going to get it. And I want people to remember one thing. I don't sell gold and silver to become wealthy. I sell it because it is wealth. I've said this a million times. The wealthiest people in the world own lots of it. So sure, you own enough of it, you'll be wealthy. You do not buy it to become wealthy. However, when you think of where this can go, silver is just a tiny little market relative to the capital that can and is flooding into it. When that happens, Jesse, the move can be fast and quite disorderly.
Andy Schectman's most important question cuts straight to the point. Who is taking delivery of tens of millions of ounces of silver every single month? 65 million ounces leaving Western exchanges in 1 month is not retail buying, and it is not traders placing bets. This is big money moving with a clear purpose. So who is it? Is it governments quietly stockpiling silver now that it's being labeled a critical mineral? Is it large industrial players locking in future supply before shortages worsen? Or is it sovereign wealth or financial institutions positioning for a breakdown in the paper market? Let us know what you think in the comments below. That context brings us back to the growing divide between Eastern and Western pricing, where physical demand is asserting itself most clearly. The Shanghai market is not just pricing silver higher, it is revealing where price discovery is now taking place, and where it is no longer trusted.
When you see the Shanghai Metals Exchange consistently pricing silver above Western spot and futures, it's basically the market screaming that the metal is worth a whole hell of a lot more, not only where it's needed, but from where it is being financially priced. And it's the market's way of saying you're full of crap, COMEX and LBMA. And the Shanghai ecosystem is far more tied to real metal moving to real end users, industrial fabrications, wholesalers, etc., where the West sets the paper price largely through leverage paper futures that is now beginning to be viewed as fugazi. The widening spread that we see is a signal of tightness. And it's not a rounding error, man. And it's perhaps the beginning of real price discovery for the first time ever, right? Because silver has never been allowed to find its real price discovery, because I don't care what anyone argues with me on. It is my belief 1000% that it is the military industrial complex of the West that needs silver for high-tech weaponry, period, that has suppressed the price. And it's not just the United States, it's all of the Western military, France and the United Kingdom and all of the strong militaries across the Western world that have used military to, in essence, rule the world for a very, very, very long time. And it's not even about the price of it going too high, because it's inelastic. You need just a little bit for a very high-priced piece of military equipment, but you need it. And if the world figured out just how valuable it was, well, that would be a problem. So if the West and the military-industrial complex wants to rule the world, sell all their weapons, not just to the West, but through the NATO allies, and then continue this. And then, of course, when you see countries getting blown up with said missiles, who gets the reconstruction contracts very often? Well, it's BlackRock, which is a military-industrial complex. And it's just, you have to take a step back from conventional thought and wisdom and the people giving you advice maybe don't see the world quite the way that you do. And I'm speaking to all of you out there. And if all these, your financial advisors say you're crazy and why would this be true? Because the people that are doing this don't see the world the way that you do. And we've been right, us watching this show, we've been right. And it's about time that we get some acknowledgement of it from the financial media, saying, geez, we were wrong. Well, that isn't going to happen. Anyways, I would say it like this, man. The East is doing price discovery in the physical, and the West is still doing price discovery in the paper. And the spread is what happens when those two worlds stop agreeing. And if this continues, especially if it widens, and the early stage evidence is that it is widening, the physical market is starting to overrule or override the paper market, period. And when that dam breaks, the move often, I would think, isn't polite. It'll be chaotic and maybe even disorderly.
Starting January 1st of this year, China has implemented export controls on silver, requiring companies who are exporting the metal to be on an approved government list. I believe so far we have 44 companies that have been authorized to export silver this year, but this certainly does potentially put additional constraints on an already tight supply. How do you think this move could impact the supply-demand dynamics for silver?
Yeah, you're right. It is a tight supply chain, and this is a tightening of the valve. And especially for a market that runs at just-in-time inventory, it can get potentially very interesting. It can get very interesting. So the Chinese, what's it called? Chinese Ministry of Commerce published a white list of 44 companies allowed to export silver. And anything outside that lane is effectively shut out. There were many, 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 many small and mid-sized refiners that would send metal out into the West, and those are done. And even those approved evidently face a big additional licensing step, which means more time and cost and paperwork, and Beijing can slow things down whenever they really want. One of the things that people missed about this, to me, first of all, China refines 70% of the doré, right? And so those that were approved are state-run, and the state did something in November that not a lot of people talked about, and that was that they came out with something saying we are going to prioritize exports for domestic necessity, for domestic demand. And that was quiet. But in essence, what they are doing is basically, in my mind, they're prioritizing domestic supply. And this is going to raise the risk premium, which basically means, am I going to get it, right? And the uncertainty widens spreads, right? And so this is why you see lease rates going higher, and rates and borrowing costs, as we are seeing, are indeed accelerating. And I think it will also accelerate industrial stockpiling by locking in supply, which will tighten the market further. In other words, who the hell is standing for possession of all of this metal? 38 million ounces just in the first 6 days of the January non-delivery contract month, right? And the 68 million or whatever in December all-time record. I wonder, could it be someone like the U.S. government, now that it is a critical mineral, stockpiling? Could it be Tesla, Samsung? We were already told Samsung went to Mexico. As I've been saying on your show before, China's been doing that for 2 years, going right to Mexico, the number one producer, China's two, and to Peru, the number 3 producer, and buying up all their doré and concentrate, paying double what the West will, shipping it home and refining it. Well, Samsung just did that themselves. You are seeing a disintermediation of the market. They're going right to the source, buying doré and concentrate, which isn't reportable, which isn't verifiable in terms of purity and in terms more so of how much. I think the takeaway for investors is the same. When a government turns a commodity into something strategic, and another government adds licensing friction, supply becomes more political, maybe much less available. They call that elastic. And in a small market like silver, it doesn't take much to create a big price response. So you do not buy it to get wealthy. However, you're looking at a once-in-a-generation type of thing.
Andy's analysis of Shanghai pricing above Western futures highlights a fundamental breakdown in how silver is valued globally. In the East, silver trades closer to end users, industrial fabricators, manufacturers, and entities that require immediate delivery. In the West, price is still largely set through leveraged futures markets that assume liquidity and trust in future settlement. The widening gap between these systems reflects a growing rejection of paper pricing mechanisms in favor of physical certainty. China's tightening of silver export controls adds another layer of pressure to an already constrained system. By limiting exports to a government-approved list and prioritizing domestic needs, Beijing is effectively politicizing silver supply. For a market that operates on just-in-time inventory, even modest licensing delays increase risk premiums, raise lease rates, and encourage stockpiling behavior. In a market as small and inelastic as silver, these frictions matter enormously. For everyday silver investors, this moment is not about chasing price targets. It is about understanding that silver is transitioning from a misunderstood monetary metal into a strategically contested resource. When availability begins to matter more than quoted price, volatility accelerates and price discovery becomes abrupt rather than gradual. Those who already hold physical silver are no longer speculating on upside. They are positioned within a system that is being re-evaluated in real time. I want to be clear, this channel is not here to sell excitement. It exists to follow structure, incentives, and reality. Like many of you, I've watched silver endure decades of suppression, mispricing, and dismissal. What we are witnessing now feels different, not because of hype, but because of behavior. If you're part of this community, let me know your thoughts below. Where are you watching from, and how do you see this playing out? Please like, subscribe, and share this video so this discussion reaches others who care about understanding what's actually happening beneath the surface. Thank you for being here, and I'll see you in the next one.